Welcome to the Daily Block, the top events happening in the past day in crypto and why they matter, fast and with zero mercy. Bitcoin ETF inflows push market cap above about 4.21 trillion as BTC nears 124,000. Bitcoin marched back toward its all-time highs, while the total crypto market topped about 4.21 trillion, driven by monster institutional flows into US spot Bitcoin ETFs, roughly 985 million in one session and about 2.25 billion over the last 4 days. BlackRock's IBIT continues to lead the inflows. BTC dominance is climbing, and ETF assets under management are swelling like a money printer on steroids. The market is currently price discovering on ETF liquidity, not retail FOMO, and every big institutional wave amplifies BTC's momentum and can drag alts along for the ride. Why it matters for traders. ETF liquidity is the primary engine right now. Large, repeatable inflows raise the odds of a continued run and create either spillover into alts or violent rotation if flows pause. Next up, Tether keeps hoarding hard assets and Bitcoin like it's prepping for a doomsday buffet. Tether disclosed another buy of 8,888 Bitcoin and is steadily diversifying into hard assets like gold and farmland, claiming large aggregate BTC and physical reserves while building out treasury vehicles. The stablecoin issuer is morphing from a simple reserves manager into a quasi-sovereign treasurer, moving from cash into real assets on a notable scale. That behavior trims the available liquid BTC float and signals a big money appetite for long-dated, on-balance exposures. Why it matters for traders. When a major stablecoin issuer removes supply and parks it in hard assets, it structurally tightens liquidity and becomes a bullish input for price squeezes during rallies. Moving on, Coinbase files for a national trust company charter with the OCC, but insists it's not becoming a bank. Coinbase applied for a federal trust charter that would streamline custody, payments, and stablecoin oversight, while carefully saying it still won't turn into a regular bank. The filing fits a larger pattern of crypto incumbents seeking federal permissions to reduce regulatory friction and onboard larger institutional clients. If approved, a federal charter lowers uncertainty, speeds enterprise adoption, and could make on-platform custody and product flows stickier. Though it also brings compliance costs and tighter supervision. Why it matters for traders. A federal charter for major exchanges would cut regulatory risk premium and likely accelerate institutional flows into on-platform products, bullish for adoption, nuanced for margins, and a catalyst for market moves. Roll the tape. Bitwise files an S1 for a spot Aptos ETF, and APT immediately spikes. Bitwise filed for a spot Aptos ETF, and the market reacted like someone dropped a meme rocket fuel cocktail. Aptos jumped to roughly 30% almost instantly. Asset managers are clearly trying to expand the ETF factory beyond Bitcoin and Ethereum into high-profile Layer 1 tokens, treating successful ETF mechanisms as a repeatable product play. The mere path to an ETF approval or the expectation of one can reroute huge institutional dollars into an alt and create outsized short-term flows. Why it matters for traders. ETF filings for Alt L1 tokens are a major distribution channel for institutional capital. The filing itself can pump price action and trigger fast sector rotations. Next, Chainlink on-chain metrics show supply tightening and derivatives positioning heating up. Chainlink's protocol reserves topped about $9.3 million, holding 417,000 Link, while exchange balances hit near 6-year lows, and Link derivatives open interest sits around $1.3 billion. Price has been range-bound, but these supply dynamics, less exchange inventory, and big open interest mean that any directional spark could be enormously leveraged. Traders should be ready for amplified moves, whether it's a breakout or a classic fake-out whipsaw. Why it matters for traders. Falling exchange supply plus large derivatives. Open interest creates a setup where small triggers can produce outsized volatility. Risk sizing and stops matter. Switching gears to the fast, loud, and irredeemably greedy side of the market. Blockchain FX pre-sale frenzy. On-chain signals and sponsored pushes show massive pre-sale momentum for Blockchain FX, with reported raises topping $8.6 million at a pre-sale price of 2.6 cents, and a confirmed launch price pegged at 5 cents. Whales are rotating capital into the pre-sale. The project touts staking and daily USDT rewards, and hype is being served piping hot. Pre-sale gushes like this suck liquidity from elsewhere, and often catalyze short, violent pumps followed by brutal dumps if listings or tokenomics disappoint. Why it matters for traders. Pre-sale whale rotations are high liquidity, high-risk plays that can steal momentum from other markets. Expect extreme volatility and perform smart contract checks and audits before committing size. Keep breathing because meme mania refuses to die. Little Pepe presale ramps, while Gemini AI fans dream Doge to $1. Little Pepe's presale is reportedly deep into stage 13 at 0.0022 and has raised about $26 million, with stage fills moving quickly. At the same time, bullish models and commentary, including attention from big players like Gemini's AI folks, are floating aggressive Doge narratives, with targets like $1 being shouted into the void. Meme coins and presales still print outsized short-term returns when liquidity and sentiment align, but they remain the market's most binary and scam-prone corner. Why it matters for traders. Meme flows can reallocate massive retail capital very fast and create huge short-term returns, but tail risk, rug risk, and brutal dumps make position sizing critical. And finally, XRP Tundra presale advances to Phase 5 with a dual token and cryo vault staking pitch. XRP Tundra moved into Phase 5 at about 9.1 cents, offering a 15% bonus and free allocations in a second token, and is promoting time-locked cryo vault staking across XRPL and Solana, while touting audits and liquidity protections. The dual token model, plus staking incentives, aim to pull capital from the large XRP holder base into a launch event. Projects targeting big communities with yield and vaults can generate intense short-term demand. The quality of audits, tokenomics, and launch liquidity mechanics will determine whether this is a healthy listing or another wrecked parade. Why it matters for traders. Targeted yield packaging can pull capital rapidly from staking holders and create volatile listing action. Audit and liquidity mechanics are the guardrails traders must check. Quick trading notes for Reddit-style traders. Macro ETF flows remain the dominant short-term driver. Daily ETF inflows and AUM updates move markets more than weekend tweet storms. Presales and meme plays can print greater than 10 times within a single cycle, but are extremely binary. If trading them, use tiny size, verify contracts and audits, and be ready for violent dumps on listings. Regulatory and custody progress, like federal charters, are structural catalysts that change institutional risk premia and can spur durable flows. On-chain supply squeezes, tether buys, chain-link exchange drawdowns, combined with concentrated derivatives. Open interest are classic setups for sharp moves, so keep stop discipline and position size conservative. Hit subscribe for daily snark, charts, and the data that actually moves price. That's today in crypto, where the gains are imaginary and the pain is real.